The global screen is all green today. Here's Nigel with the world view.
Well, that's right. Precisely. Good news coming over the weekend. A favorable outcome coming out of that meeting between U.S. President as well as Chinese Premier. 90 days is what we're waiting for. They're going to try to discuss whether or not they can hold off those tariffs and hold off increasing it from around 10% to around 25%. So good news. Asian markets, they are on fire today. The Hang Seng is up more than 700 points. Or the SGX Nifty early morning was indicating an 80-point bump up. It's still indicating a 70-point bump up odd. Crude oil prices as well have bounced up. It's a bit of a worry, but not so much of it. At $62 per barrel, it's still very, very much manageable. And remember, in the past month itself, crude oil, both Brent as well as NYMEX, they've corrected more than 20%. The worst month we have seen in the last 10 years or so. The all-important meet, though, this week is going to be in Vienna. Let's see what exactly is the production cut. So keep an eye out on the 6th of December. That's when, in fact, we'll get that detail coming out of there. But on the whole, the U.S. markets, it seems they were sensing this sort of trade truce coming out from the U.S. President and the Chinese Premier meeting, because they ended in the green, the U.S. markets, in Friday's trading session. And importantly, stocks that move according to what is the expectations. Boeing as well as Caterpillar, both of them ended with gains of around 2 to around 4%, telling you the street was quite optimistic in terms of an outcome. Last week was splendid. The Dow had its best week in the last couple of years. The S&P 500 had its best week in the last 7 years or so. So clearly, these markets are factored in some part of this good news. But the European markets, they were sulking ahead of that crucial meeting. All of them ended in the red, barring the Italian index. There's hopes that, in fact, the discussions that are being held between the Italian government and the European Commission, that will really come to some kind of conclusion. And that's why that market was one of the only European markets that ended in the green. But this morning, positive cues to start off trade, 70-point bump up. Let's see where we go from there. Back to you all.
Okay. Thank you very much, Nigel. That's certainly a great start. But let's see if India is able to continue what the SGX Nifty is telling us. But how should an investor into India make sense of the 90-day truce between US and China? Richard Harris, the Chief Executive of Port Shelter Investment Management, joins us now on the phone line. Good morning, Richard. Thank you very much for joining us. Well, that is the first question. If you are an India investor, should we celebrate less? How are you approaching India in the backdrop of the events of the weekend?
Well, I think that obviously the events of the weekend don't necessarily impact India that directly, except in terms of overall sentiment. Overall sentiment has been pretty subdued over the last 2 months. And of course, the markets have come back. And there have been some, I think, some quite serious reasons why sentiment should have been weaker. But I think we are looking forward, to a little bit more optimism now. I think the possibility of a Santa rally on the back of what Trump and Xi have said, a truce through to the end of the year, indeed through to March, is generally a positive thing. So, as you can imagine, all the Asian markets have a smiley face on them this morning.
Richard, hi, good morning. A Santa rally is fine, but where will it come through? Because in the last 2 months, the trade has been to put money in emerging markets versus developed markets. Do you think that trend will continue? Do you see more money flow into emerging markets through the course of the next couple of months?
I think it'll happen to a certain extent. I mean, the emerging markets did rather better, I think, because they'd done so very badly the year before. Whereas developed markets tended to stay up. I think that we're probably in a period now where we're going to have fairly muted rises in the markets. It does look as if global growth is slowing around the world now, not just in places like Europe. And it does look as if maybe earnings growth will start slowing. I don't think we're likely to see anything like a recession. But of course, the markets also don't like a slowdown in growth. And that's what I think that they have been predicting over the last couple of months.
Okay. Richard, per se, how are you looking at India? We were actually, as my colleague was pointing out, the beneficiaries when the trade war was, kind of hotting up, at least hot words were there. India received a decent amount of money in November. It's the first positive month of foreign flows after probably February or March. However, our GDP numbers are indicating a bit of a slowdown. Your thoughts on investing in India?
Well, I think generally I've always been mildly bullish on investing in India. I mean, of course, the market has got its periods of volatility. here and there. And slowdowns are obviously going to mean that markets are going to have quite a headwind to push against that. But if you're looking longer term, especially as a global investor, I mean, I've been invested in India since the early 90s. And it's been a fantastic investment over that time, even if you take currency and these sort of things into account. So I think longer term, the picture still has to look good. I mean, India's growth genuinely is still one of the highest in the world. Chinese growth looks as if it's high, but I think the GDP figures are rather difficult to believe at the moment. And so India stands out there. So I think as a long-term investment, I'm still bullish. Of course, there will be shorter-term moves that they're very much dependent much more on the domestic economy. Okay, so you're still bullish in the longer term. One final question from my end then, Richard. The big tailwind that we had over the last 6-8 months was the fall in crude. Now crude is back above $62 a barrel. Do you think that positive trigger has played out completely for the Indian markets at least? Well, the oil price has been a little bit of a conundrum. It saw quite a big fall once Saudi Arabia seemed to have fallen from grace. Saudi Arabia, of course, is the key pumper. And one of the thoughts is that they don't really want to pump more oil because that's going to upset the US even more, which it might well do. Now, the US doesn't necessarily want very low oil prices as well. And 62, I think, is certainly at the lower bound of what you'd expect to be a normalized range. But I suspect that in the short term, we're not going to see a big rally. And that's obviously going to be positive for oil importing countries. So I think that's a bull point going into the end of the year as well. All right, Richard, we'll leave it at that. Good to hear that you're positive about India generally. Thank you very much for joining us. We have to take a break on that note. Our top 10 list of stocks are lined up. Our entire research team will be with us.